How many of you would love the opportunity to eliminate some extra debt every month? Most of us have a mortgage. I know my wife and I have a mortgage, and it is the largest bill that we have to write every single month or pay online, however you pay. But how would you like to hear some tips and tricks that you can use to pay off your mortgage probably a little sooner than you think? It's a very realistic goal that a lot of us can set. I'm going to give you some tips and tricks here on this video, and hopefully that will eliminate some debt for you and put a little extra cash in your pocket each month. I get it. I know that for many of us, retirement can be a pretty stressful time in our lives. Obviously, I'm not to the point of retirement yet, but I can completely see how you're making a certain income when you were working, and then when you retire, you oftentimes bring in less income every month. Most people go into a fixed income situation. So your budget has to change a little bit, and if you still have high expenses and things like that, when you get ready to retire, then it can be extremely stressful. So I hope through this video, I can give you a few tips on how to better manage that entire situation for you. So when you get ready to retire, hopefully you can have your mortgage paid off, or maybe to the point where it's almost paid off, and you eliminate debt and eliminate stress. So number one, let's talk about the mortgage in the first place. Just be mindful of the mortgage that you jump into. Now, I know that it's very easy to go out and look at houses, and you look at a $600,000 or $700,000 house, and maybe your budget is $500,000. Okay, some people tend to do that. Do me a favor and don't do that. If your budget's $500K, keep it right around $500K, because here's what will happen. You'll go into those houses that are $600,000, $700,000, $800,000, and yes, they look great. There will be all kinds of features and upgrades and trim and things like that that will catch your eye, and you'll fall in love with it. And then you'll tend to navigate toward that higher end of your budget. So do yourself a favor and have a heart-to-heart with your realtor and say, hey, look, keep me in 500 to 525 or whatever your range is, and stick to that when you're doing searches. So don't jump into a high home situation, high cost or high mortgage situation, because it will just cause pain for you down the road. So if you can do that, if that's one big first step. If you can take that first step and stay within budget, then it helps to alleviate some stress for you down the road. While we're here on this first point, one thing I forgot to mention, when you're putting together your budget and trying not to over borrow on your loan, take a look at the principal, the taxes, and the interest, right? And the insurance that you'll have to pay every month. And that's typically what comprises your mortgage payment. Do the math and try to keep that number, that payment, less than 30% of your take-home pay. Okay, so don't look at your gross, because we all know that there are taxes and other things that typically come out of our gross pay. So try to keep that number, like I said, 30% under your net pay or your take-home pay. And if you use that guideline, then that helps to make sure that you don't over borrow and cause some stress for yourself in terms of managing that monthly budget. Number two, let's talk about the term of your loan, okay? So we all know that you can do a 10, 15, 20, 25, 30 year type loan, whatever you want. But just be mindful of that term. And what I mean by that is, let's say you are 50 years old and you're buying a house. Don't jump into a 30-year fixed rate loan if you can get around it. Okay, I know that if you utilize a 30-year fixed rate loan, of course your payment's a little lower. But if you're 50 years old and you jump into a 30-year note, then guess what that means? It means that around 80 years old, you'll have the house paid for, And of course, by then you're well into retirement age. And who knows what will happen when you stop working if you stop working around 65. So if you can, minimize the term on that loan. So make it a 15-year note if the budget allows. So we're talking about budget. Got to jump back to point number one and remember what I said. Be mindful of the size of loan or mortgage that you jump into, because like I said, if you do number one well, it really helps with this step here at number two, and then a couple more that I'll tell you about as well. So point number three, think about this monthly payment every month for your mortgage. We typically send it in once a month, but have you considered splitting that payment and actually sending it in every 2 weeks instead of once a month? So to illustrate this point, I'm going to head over to my handy dandy white erase board, and I'll show you what I'm talking about. Yeah, I know, y'all love it when I jump up here at my handy dandy whiteboard and you get to take a look at my terrible handwriting. I get it, whatever. But hey, hopefully this helps to illustrate the point. So what do I mean by making your payment every month, right? One a month, or making that payment every 2 weeks. So let's say, for example, that you have a mortgage that is $1,000 per month. So your mortgage is $1,000 a month, and if you make that monthly payment once a month, right, for the year, what does that mean? That means that you've paid $12,000, right, total for the year. So here we go. With this scenario, you've paid $12,000 for the year. Now, what if you change your payment structure and instead of paying that once a month, what if you paid it every 2 weeks? So what if you took that $1,000, split it in half, and let's say you make a payment of $500 every 2 weeks? Let's take a look at that and see how that looks. So if you make this payment at $500 every 2 weeks, then that means for the whole year you will make 26 total payments. So 26 total payments times $500 per payment, guess what? That totals more than $12,000. That's $13,000. So what does this mean for you and your balance, right, that you owe on your mortgage? So for the year in this scenario in blue, you've paid a total of $12,000 in payments, and down here you've paid $13,000 in payments just by splitting that monthly payment in half and making that payment every 2 weeks. So what does that mean for the life of your loan? It means you get to pay that bad boy off just a little bit quicker. And guess what? That's a great thing, right? Finance has always been a big passion of mine. So as a realtor, one of the things that I get to do, and I love this part of my career, is that I get to sit down with clients and talk about decisions today, right, in terms of buying and selling a house, but also we get to talk about those decisions, and I like to help my clients think through, how will this decision impact you 10 years, 20 years, and 30 years down the road? Point number 4, pump some bonus cash into your mortgage. So what I mean by that is some of us get some type of bonus every year. Some people might get a bonus every 6 months. Some people, maybe it's once a year. But when you get that money, take some of it and pump it into your mortgage. Just put it away into your mortgage, and it helps to increase the equity level in your home, and then it helps to increase the chances that you'll pay off that mortgage a little sooner. I know it's tempting. We all like to spend money. We all like to go out and buy nice things for ourselves. I get it. I'm not saying don't do that at all, but just take a little and pump it into your mortgage if you can, and that will help you to drive down that debt a little sooner. So number 5, before I jump into number 5 and the last point, I want to ask that you subscribe to my channel. So real quick, just take a second, just hit the little subscribe button and just kind of make it go beep, beep, or whatever sound it makes, and hit the like button too for me so you can like this video, and it just helps me with some more exposure in the internet world for my channel. So I'm going to wait for you. Deep breath, making sure you've done it. Okay, I think we're ready. All right, let's jump into point number 5, the final point. If you can, refinance your loan. Refinance into a lower interest rate. So I'm not saying, hey, refinance just for the fun of it and pull out a bunch of cash and go spend it on something else. No, don't do that. So take a look at your interest rate. Maybe you're sitting on a 5-6% interest rate or whatever. Take a look at what current rates are today, and if it's lower, then there might be an opportunity for you to refinance. So a good example here to think through is, let's say you have 19 years left on your current mortgage. So you've been paying on it for 11 years, you started out with a 30-year note. You're down to 19 years, right? Making good progress. However, what if rates are low enough for you right now so you could refinance into a 15-year note? So think about that. So you'd shave off 4 years, right? You're at 19 years, and now you could potentially be at 15 years. And I know there's a chance that your monthly payment, I should say, will probably be higher, right? Depends on that initial interest rate. So you might have a little higher monthly payment, and if you can handle that from a budget standpoint, then why not? Why not do it? And then that increases the chances that you can have that mortgage paid off for yourself a little bit sooner. So those were 5 tips and tricks. I hope it helps you. I don't know where you're at in life, whether you're in your 40s or your 50s or even a little bit younger. Hopefully this is helpful knowledge for you to just try to plan for the future. I know we all like to look at today. Today, we're also focused on what's going on today. But do a little financial planning for yourself, and that way you'll help to eliminate debt down the road and make life a little bit easier on yourself and your family. So I appreciate you being here with me today. Thanks so much for watching. Like I said, like and subscribe, and I will hit you guys up with another video soon, and hopefully it will help you in whatever situation you're in. Have an awesome day, and we'll see you next time. So here we are in February 2022, and I get the question all the time, what's going to happen in 2022? Are interest rates going to go up? How quickly are they going to go up? Is the housing supply going to finally increase for us? So myself as a buyer, I can maybe have a chance, right, at a house. So I answer all those questions in another video here on my channel, and the thumbnail looks like this. So take a look at it, give it a listen, and I hope it helps you to figure out what's going to happen here in 2022 and how it can help you in your situation.